Welcome back to my channel, everybody. Thank you for tuning in. And in this video, I'm going to go over the trade that I took today, basically why I took the trade, how we took the trade based off of the supply and demand levels. And I'm also going to break down, which is going to be key, a key time and sales lesson, which is going to really benefit all of you watching this to understand the time and sales better and how to properly use it with thick markets. Now, if you have any questions relating to what I'm going to talk about, you can message me on my Instagram. I will link this in the description below. It's worth a follow as well. I post very good educational videos, daily trade recaps on there. So definitely worth a follow, and you can ask me any questions you have on my Instagram. So without further ado, let's break down this trade, and I want to go over my full thought process with all of you. Okay, so starting before the open, we had a pre-market plan this morning. We had a 6-hour supply zone down here at the 3335 level, and we had multiple supply zones above us. We had a 3-hour, and then inside the 3-hour, we had a 2-hour and a 1-hour supply. And then above these supply zones, we had a 3-hour supply that is a used zone that was tested yesterday that we actually rejected pretty nicely from the supply zone at 3378. Now, when I see stacked imbalances like this, that's basically telling me on multiple time frames there are supply imbalances, and this level is going to be a strong level once price comes up to it. If price does test this level and reject, you could expect a nice sell-off, and it's going to be basically a higher probability trade because we have a stacked imbalances and we have agreements within the time frames that we look at. Now, if we do hold these levels, that is a very bullish sign because obviously we're going to have new buying taking over supply. And if you have new buying taking over supply, we basically are agreeing on price, and buyers want to see how attractive higher prices basically are going to be. Therefore, the market is going to continue to rally because we found value and we basically found a fair price inside of what was a previous supply zone. So now this is a 5-minute chart, and this is right before the market's about to open. We were basically in between these two imbalances, and we wait for price to either come down into demand to take it long or rally into supply to take it short, as long as there's confirmation that buyers are ready to buy in demand and sellers are ready to sell in supply. So this morning what happened was the S&P opened up pretty sideways, and we were consolidating in a 5-point range for a decent amount of time. Now, this is why the time and sales is a very important tool for you to use. And just time and sales, you don't have to use the level 2. This is just to see who is aggressive and who is not aggressive. So keep in mind, I'm going to make this a 5-minute chart. Let me expand this. So there's different filters on time and sales. When you're trading a thick market like the S&P 500, the future, it's a very, very thick market. So if you're staring all day at the level 2, where the increments are based off of ticks and the bid sizes and the ask sizes are very heavy, it's going to be tough to really understand where the absorption's coming from and basically where you have big buyers or big sellers. It's just it's a big mess looking at the level 2 if you're not properly looking at a depth of market. Where you can see it basically on a vertical basis with all the limit orders, pulling, stacking. So ThinkorSwim is very tough for level 2 in thick markets. Time and sales, ThinkorSwim has a great feature which basically lets you filter out based off of size and based off of the price. So I'm going to break this down as best as I can and show you the filters that I use. So if you go to the little settings button on the time and sales, the settings I have is the time, the bid, the price, the ask, and basically the size of the order that comes through the ticket. The reason why I have bid and ask on here and the price is because I want to see the price that got hit, if it was hit on the bid or if it was hit on the ask. Now keep in mind, all orders, limit orders on the ask are sell orders. So if somebody on the time and sales hits an order on the ask, that is an aggressive buy order, and they're basically removing liquidity from the market and taking out a seller. Vice versa now for the bid side. All the bidders are passive buyers sitting on the bid, and basically every ticket that comes through on the time and sales at a price that matches up the bid is basically going to be an aggressive seller who's selling to an aggressor or to a passive buyer. So from a time and sales standpoint, you're going to be able to see who's aggressive and basically who's hitting the market and who is removing liquidity by basically hitting the market. And then what I do is I could filter it out by, a couple of contracts. But what I do is I filter out the S&P contracts by 50. Now, if I change it to 50, you're not going to really see anything on here right now because, oh, you do. Okay. So when you have it over by 50, you basically have someone who is hitting the market with over 50 contracts. 50 contracts on the S&P 500 is a very big and basically aggressive position where if you see multiple of them coming in, anything over 50 is basically a big number, and it's either going to be a very aggressive heavy buyer or very aggressive heavy seller. You're not going to see only 50s. You're going to see, you could see orders for 200, 2000, whatever the case may be. And this is a good feature for using time and sales with ThinkorSwim. So then what I saw this morning, which really gave me confirmation, and I put this into the chat room, which I'm going to introduce to you guys in a second, was the market was rallying, and then we were started pulling back. But while we pulled back, I was seeing massive orders, for 80, 150, 200 orders at a price which was hitting the ask while the market was coming down. What that's telling me is that you have buyers hitting the market aggressively, and you have sellers who are basically passive but are basically giving up on the market as price is coming down. And you also, what that's telling me, if you were to look at the depth of market and basically the order book, which ThinkorSwim cannot really do, you would have seen probably a bunch of buyers basically removing their orders. And what they do is when they remove their orders, they're basically the people that are spoofing the market and actually hitting the ask with the market orders. So it's a big game, it's a big trap, and you're never going to really see everybody's true intention. But what I saw was price was coming down, and at one point this green candle right here with the long wick was a very big candle to the downside. So when that was happening, like I said, there was tons of orders coming through on the ask, hitting the ask like crazy as price was coming down. And that is a very bullish sign. And that's basically telling me buyers are buying down here as the price of the stock is coming down. These institutional traders, they cannot buy when the stock is coming up because that's just not going to work for liquidity, the liquidity aspect of trading. They have to buy when everybody's selling. And vice versa when they're looking to sell. So when the market's coming down, I saw that aggressive order hit the ask, multiple of them, and that gave me a little bit of confirmation that maybe expect prices to then rally into the supply zone. So this was a speculative type of play where I thought that price was going to rally into the supply zone because of those orders that were coming through, and because we were so close to the zone, it almost made sense that they were going to make price come up and attract the participants to the upside inside of the supply zone. So trading is a big probabilities game. It's all based off of context, basically of doing what the market is telling you and not deviating away from that. So what I just explained about what I saw basically in price was my context to the trade. I knew we had buyers stepping in, and I saw the price consolidating. Like I said, it's a big probabilities game where you have to enter where the market and the risk is in your favor. If it is not in your favor, then do not take the trade because you're going to lose more often than not, and your winners are going to be less than your winners are going to be less than your losers. So when I saw price consolidating like this after those buyers were stepping in, I took it long, risking the low a day, which was 3353, and I traded the SPY call contracts. I posted this in the Discord. It wasn't the highest quality of the trades because it was basically based off of speculation. It wasn't in an imbalance. I was just speculating that more demand was going to form down here. And then, 5 minutes later, we got a nice pop and a nice rally into supply. When we got this move into the 3-hour supply, I sold half of my position. I was comfortable with my profits, sold half of my position. And what I do is I leave half of my position remaining, just to protect myself, and I boost my stop loss up. Basically, as the market's moving up, my stop loss gets raised up every time. I do it manually in my head, so I can never make the trade ever go red on me. So we came into supply, this 3 hours where I scaled out 50% of my position. Then we moved up even higher into this 2 hour, kept my position, kept it, pulled back a little bit, and then this created a 10-minute demand zone because we have two 5-minute candles right here inside of a supply zone, and demand inside supply is bullish. It's basically saying buyers are interested inside supply, and that's not really a go ahead to take it long. Yes, you can take it long because obviously we still are in supply and we still can reject. But these two 5-minute candles right here basically created a 10-minute demand zone inside supply. So I had confidence holding on half of my contracts. And what I did was I sold at 3369 at 1 hour supply with no questions. And then, we basically continued to consolidate in this zone, held value based out here on higher time frame as there's multiple 5-minute candles. And then we basically broke above the supply zone. It's not a go ahead to basically long above supply. It's just a bullish sign. And then look what happens. Price pulled back. And remember that 10-minute demand zone that I was just saying right over here? If I make this a demand zone, look where price pulled back right into it. Pulled back right into this demand zone. So this right here, hindsight, was a great second entry if you missed taking it long where I did. So there's multiple ways. There's multiple different angles you can, review the market, give it context. There's many different ways you could take trades. And this was just based off of a time and sales, how I saw those aggressive buyers. And then I'm also going to pull up the SPY contracts and show you how these options did move. So by the time of entry, it was about 137, scaled out at 173, so about 27%. And then my remaining contracts at the 1 hour supply was at about 40% return. So it wasn't a bad trade, wasn't a big hitter. I wasn't in heavy size as I was in yesterday, but it's more of a lesson I want you guys to understand on how you can use these zones properly. And then another thing is now that we're above the supply zone, it does not become new demand. I get this question a lot. Old supply does not become new demand, and new demand does not become old supply. So I hope you guys enjoyed this video. Hope you learned something. Drop a like, follow my Instagram, subscribe to the channel, and comment if you have any questions. Appreciate it. Thank you for watching.